This is a trade recap of Aussie Yen from the 23rd to the 29th of Raven X, our fully automated trading algorithm turned indicator. It's available on TradingView. I'll leave a link below if you're interested in it. We have all the back tested files and all the data to show that it actually has a proven statistical edge. It's really, really impressive. But I think once you get the idea of how it works and how it functions, you'll understand it a little bit more. So, what it is calculating at the moment is the range. So we're measuring the range, finding out the volatility within this range before we get our entry window, if it's viable for an entry window. From that point, as we click on, so still measuring that volatility, we have our entry window. Once we have the entry window, we're just looking for this, which is an entry short. Now, based on Aussie Yen, you've got two entry methods that you can utilize. One is low risk, high strike rate. Okay, so we have from there, that entry down to this little green line here. So it's all fully mapped out for you. You can also see all of your statistics over here, depending if you have Ultra on or not. So if you remove the Ultra, we just go back to standard entries, stop loss above, entry here, and then we click through. What I like to also do is to move my stops to break even at a certain point. We also have a forced closed entry, a forced close. So this is also completely up to you. It's just a little bit of added mathematics in it. So once this looks like that price is beginning to slow down, it'll say forced entry because we might pop back up to the upside. So it's more of a warning signal than an actual gospel that you need to follow. So add that into your testing of this system for yourself. It's crucial that we obviously understand the system before we start executing on it. So then we get that 1.5% there. Now, if you're going to utilize Raven X Ultra, it's a little bit different. We have our entry still at that same point. We drag our stop above the red line. It's going to decrease our risk, same risk, but it's going to shrink that stop loss size. This is going to cause much lower strike rate, much higher risk to reward. But how we also capitalize mainly is that we have a break even method here. So this yellow line, once we trigger there, we move our stops down to that break even point. This is protecting a lot of our capital in case we reverse back up, especially with such a small stop. We can get taken out very, very quickly. So we want to preserve our capital at all cost. Based on this, we then continue. Now, as I said before, these are your testing methodologies that you will need to analyze for yourself. What actually makes the most sense for you? For me, I have it automated on a forced close. Okay, once it figures it out, and that's just me being risk adverse. We get the forced close and we can then shut that out for a really neat 6.35%. But if you don't and you let that trade right out, you will get that 9.73 or a 9 to 1, which is a really, really nice and huge trade. That can be your week done, if not your whole month, just on that one basic trade. But let's continue the month. So that's an entry on the 5 minute. Let's jump out to the 1 hour and continue our trades. So we're getting our zone again pre-marked up. Continue our loading zone. See if we get an entry. Okay, we get an entry there. Now, again, depending on how you want to trade, we're just going to focus on the Ultra for this session, and we'll make adjustments to that in other recaps. I think would be good just to give it a little bit of diversity between the styles. We nearly get taken out there. That was really close. Okay, stops it to the break even. Based on this, we're now targeting a 5.62%. We're at break even, so we've removed all risk. What do we get on this last trade? 9.73. Just so we can keep track of our weekly progress. Take this through. Oh, break even there. So you can even see that the forced close, analyze that at this point here before it broke through, because it analyzed the momentum and where the price was going. So for us, we're lucky we got out at a break even a little bit earlier, which is great. So we can add in here 0% loss on that trade. Let's flip back over and wait for the next entry. Okay. Back down to the 5-minute for entry purposes. Range looks good. Enter long here. On this candle, put our stops below. Again, targeting that break-even level for the first target, and then secondary target, we're targeting 6.54%. Clean entry, we're revisiting, and we take a 1% loss on that one. So we only need to take one trade a day. There's, based on this pair anyway, if you trade multiple pairs, you can trade multiple times per day. It's completely up to your risk appetite. We give you all the pairs, also associated, their returns, and how best to trade them based on our metrics. And then you can do your own testing and refine that also. So 1 hour. Let's continue this. Okay, we get our range, a much larger range. So it'll be interesting whether we get our entry on this one. No entry. Range was too big. Didn't really give that much volatility or expansion out. So the chances of getting an entry were pretty low. We continue. Back down to the 5-minute. Entry looking good. So we enter long. Where's that candle here? On the open of this candle, stops below. We move stops to break even. Hovering around. And then we get taken out for break even for that one. And that's the end of that week. So we finished the month at 8.73% for the week for Aussie Yen. I'll tune in for tomorrow when we do another trade recap. I hope you guys enjoyed this, and I'll see you in the next one.